The bull run is in full swing and we're already seeing some absolutely insane gains in the cryptocurrency space. Bitcoin and the whole crypto market have seen a massive injection of growth and capital in the past year. Ever since the March lows of 2020, there has been a massive bull run getting underway, with almost every single crypto gaining massively and breaking all-time highs after all-time high in short order. Bitcoin broke its all-time high of 20k in December 2020 and has already more than doubled since then in less than 2 months. Ethereum has recently broke its all-time high and is approaching $2,000, which would be almost a 20x from the lows of March. All across the space, altcoins have started pumping massively, with the channel favourite Elrond eGold running from $20 in early January to over $200 as of the 11th of February. eGold is likely to continue this trend as it has an unbelievable amount of technology behind it. But today we're focusing on Ethereum, and namely why it will reach $100k and beyond at some point in the future. Please like and subscribe. We are Crypto Maximalist. Let's begin. Recently, Ethereum has been gaining with some speed. Ever since it broke its all-time high, it's been steadily gaining in value, with a combination of retail and institutional investors flooding into the market. Whilst the largest amount of capital has been flowing into Bitcoin itself, Ethereum has also been appreciating massively, adding over 10 billion in market cap every week in January and February. This flood of money into the space is set to continue for the next few months according to the Golden Bull Cycle ratio, which predicts that we'll likely see the end of the bull run sometime in September, and for altcoins, around Halloween 2021. At this time, you'll likely want to start slowly pulling capital out of cryptocurrency positions, and a smart investor would be pulling out gains on the way up as well. Having clear price targets to remove some capital from the market would be a wise strategy, although it's not financial advice as always. Our personal strategy at the channel will be to start slowly exiting the market in August and early September, depending on how things develop for over the coming months. Getting into cryptocurrency is great, but it's arguably more important to know your exit strategy, since you haven't made any gains until you lock them in. Ethereum has recently housed a massive craze in 2020 with the emergence of DeFi, or decentralized finance. Decentralized finance are essentially projects that are set up to have some sort of function in the market without a company or entity behind them, running or controlling them. One of the main examples of this that has emerged are DEXs, or decentralized exchanges. With a decentralized exchange, you can connect your wallet completely anonymously without the need for any personal information to be involved and swap your tokens for any other eligible token. This is a huge development because it means you can swap your tokens without having to rely on any centralized entity to approve their transactions, and the only fees paid are with an ETH gas fee. Other DeFi use cases include stablecoins, which track a certain fiat currency one for one, or lending platforms where you can supply your cryptocurrency as collateral and then get loans based on the amount put up for use. These systems are incredibly revolutionary because, as we all know, it's incredibly difficult to get approved for loans by banks, as they have a large number of regulations to abide by. Having to jump through hoops to appease centralized finance enough to get approved can be difficult without sufficient credit or income to prove, so these sorts of solutions are revolutionizing the way that we can borrow money, exchange tokens, or store our value. Because of the emergence of DeFi, Ethereum has been benefiting massively due to the gas fees associated. Currently, gas fees for Ethereum are incredibly high, but this will likely be fixed in the emergence of Ethereum 2.0, which aims to add much higher quality technology to increase speed and reduce fees for sharding. One reason why Ethereum is so bullish for the long term is the sheer number of projects based upon it. Every single time a gas fee is paid through DeFi on the Ethereum network, a small amount of the supply of Ethereum is burned, which plays into the supply and demand model for the crypto. Despite Ethereum technically having an unlimited supply, the sheer amount of use that the Ethereum network is currently getting due to DeFi and so many other projects based on Ethereum means that the supply continues to slowly depreciate against the amount that is currently being mined. As the mining difficulty increases and the amount of Ethereum burned in fees keeps rising, the price of Ethereum will likely appreciate as a result. But the main reason we're so bullish on Ethereum is derivatives. The market that Ethereum is primarily targeting in the long term will be the derivatives market, which is valued upwards of $1.2 quadrillion at the high end, with a minimum of $600 trillion. Ethereum and the projects on it are targeting the derivatives market, where people essentially can speculate on the value of assets and profit as a result, often using leverage. Being able to use 5, 10 or even 100x leverage is a tactic which is employed by all the big players in standard markets, as well as in the cryptocurrency trading, and balloon the actual tangible value of the market assets substantially as a result. Ethereum has many projects developed on its blockchain which allow the users to speculate on markets, such as Hedgic, which allows individuals to buy Ether call and put options and try to decide the future price. This kind of speculation happens constantly in the world's markets, and this capital rotating to decentralized finance could see an absolutely explosive increase in price for not only Ethereum, but for all the projects on its network as well. Ethereum is the operating system which allows projects to bring their concepts to life. Synthetics is another perfect example of how Ethereum aims to target the derivatives market, which is a project that allows you to create tokens that track an underlying asset one for one. For example, you could create a Tesla long tokens and then hold them, and if Tesla stock price goes up, you make gains. This concept may seem confusing, but this is actually what happens with almost every form of trading. With most standard markets, you'll buy a derivative of an underlying asset that an exchange holds a supply of, and then speculate on the price fluctuations of said asset. You make the difference, but you don't often ever actually buy the asset. Most of the money in the world is just on a credit scheme or an IOU. For example, the money in your bank account is just a number in a database somewhere, and it's not actually tangible, and it's not backed by anything. So when you mint a Synthetics token, you're really just creating a derivative asset to use the same way you would use in any other market. The reason that these projects are so interesting is because they have a large number of advantages over traditional markets, and if they get a good amount of adoption, their prices will soar in the future. The blockchain can be accessed from anywhere in the world, and any market can be speculated on. Geopolitical regulations are no limit for decentralized finance. Platforms can't be tampered with or shut down. They have no centralized point, and they don't need routine maintenance like the vast bidding web. If recent actions by Robinhood muting traders' ability to buy certain stocks such as GameStop or AMC is anything to go by, it's that decentralized finance is becoming more necessary than ever, as platforms will likely always look to protect themselves over their users first. The vast amount of benefits coming from the DeFi space will continue to snowball into the future. Further adoption of the cryptocurrency space will only serve to increase the amount of people around the world wanting to use these platforms. Ethereum has positioned itself as the number 2 cryptocurrency for some time now, and this trend only looks set to continue into the future, with Ethereum looking more and more likely to flip Bitcoin due to their respective markets they are targeting. Bitcoin is seen as a store of value, which has a market cap between $10 and $20 trillion. From here, that would mean a 10 or 20x for Bitcoin, putting it in the region of $500k to $1 million. However, Ethereum is targeting the legendary $1 quadrillion derivatives market. And as its ecosystem continues to develop, it seems inevitable that it will boom on all time frames in the future. Currently, Ethereum is sitting at around a $200 billion market cap at just under $2,000 a token. If it had 50x from here, it would hit a $10 trillion market cap, and whilst we may not see those highs in 2021, it seems inevitable that this will be the case for the future, considering the vast market that Ethereum is targeting. A 50x from here would see Ethereum at around 100k in the future, and at $10 trillion would only be 1% of the total derivatives market in the world. To reach a 200k valuation, it would need around 2% of that market. If it managed to capture 10% of the total derivatives market, it would hit a staggering $1 million per coin, which is a 500x from the current valuation. These sorts of insane predictions seem extremely unrealistic, but it's likely with the current trend of distrust in current systems and the development of the nascent asset class that we'll see a massive Ethereum price in the future. So what is your Ethereum price prediction? Will it flip Bitcoin and become the largest cryptocurrency in the world? Let us know your thoughts in the comments down below, as we'd always be interested to hear your ideas about the price action of Ethereum in the future. Please like and subscribe. We are Crypto Maximalists.